Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite significant historical monthly demand and support area. From here, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again, here tested and rejected, again here. And what we can see is that at the moment the market is testing the same zone, has already started rejecting it to the upside. And from here, we could expect more bullish continuation to be created away from this level, as already happened in the past, every single time that the market tested this area. So from a monthly standpoint, everything looks quite bullish. Now, dropping down on the weekly time frame, what we can see. Now, from a weekly perspective, we can see how the market just shifted from a weekly bearish market to then having this horizontal accumulation, and then the market shifted to creating higher highs and higher lows. Therefore, it shifted back to a bullish market. In fact, we can see how the previous high was here and the market created a new higher high here, and the previous low was here and the market created a higher low here. Then we had a new higher high, new higher low, and now a new higher high. The next logical step would be from here for this market to create a new higher low and then a new higher high. Therefore, at that point, completing this potential weekly impulse correction and impulse pattern to the upside. Now, from a pattern standpoint, we also have to keep in mind that after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 50% and 0.618 Fibonacci retracements all lining up exactly inside of this area of previous weekly resistance turn support that we could in fact expect this market to reject to the upside. So also here, from a weekly standpoint, everything seems quite bullish. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, it is important to keep in mind that the market created a quite strong move to the downside, but now it seems to be entering inside of an accumulation phase, after which we could expect a rejection to the upside. So, especially if we will start to see more institutional longing inside of this accumulation area, we could then expect a potential rejection to the upside, as we have already identified by looking at the monthly and weekly timeframes. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the euro, the first thing that we have to keep in mind is that if we are checking the data for the euro, we're actually already checking EURUSD, because all currencies on the spot are traded against the USD. So if you're looking at the euro already, you're looking at EURUSD. And what we can see here is that with the last reports, we went from having 75.5k net positions all the way up to having 117.3k net positions, showing a strong increase of the net positioning with institutions moving back to the bullish side of the euro, therefore to the bullish side of EURUSD. So there is a good probability that inside of this accumulation area, we could see more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. perspective. However, when it comes to confirmations, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market will shift during this accumulation phase from an intraday bearish market to an intraday bullish market, at that point, I would expect a potential rejection to the upside away from this level, potentially completing that weekly impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.